You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
It's all working. I'm so excited. Oh, listen to that. It sounds just like I'm there, doesn't it? Hi, I'm here. I'm Don. And over there is Tom. And guess what?
And I'm here too.
Yeah, I know. We're both here. It's really working. We're here to talk about something really important that you really deal with pretty much every day of your life and that you'll need more of the farther along your life goes. Trust us on that. That stuff is money. And we want to help you deal with it better than you have because, you haven't done as good a job as you probably should have, right? You've done some things. Hey, we've all done some things we're not proud of. We've made some bad investments.
Are we talking about money here or something else?
We're talking about money.
Okay, checking.
This is not that kind of show. We're not just spilling our guts and bearing our soul to America. No. We're talking about money, the things you do with your dough every day of your life, and we want to help you do those things better than you've done them before. There, 855-935-TALK is our phone number, 855-935-8255. 24/7.
If you've never called the show before. If you've never called, call us.
If you've called before, call us.
Everybody's got a question about money. There's always something like, oh, sure.
Yeah, okay. If you do, then we're here for your call. It's really easy, 855-935-TALK. Like, here's one of the questions that comes up. I think of this one a lot. I really do, because I'm now at that tender age when I'm looking.
I wouldn't call it tender either, by the way.
I'm looking just around the corner there, just like right there. And I look around that corner and I go, oh, man, how much money am I going to have when I have to stop working full time or maybe even at all? How much am I going to need? And then how much is what I have now going to make? These are all those future tense questions. They drive us crazy.
Everybody wants to know.
I know.
Yeah, everybody wants to know. Talked to a really nice person last night, and they were saying, this is great. I'd love to hire you. How much are you going to make me? I hope you're going to make me a lot of money. I said, I have no idea. I'm always hoping.
After my small cap value fund did 22% last month, or 20%, or whatever it did a lot. That's what I want. That's what I want my portfolio to do. Just keep doing that.
Check the box.
Just do that.
Well, here's the thing. I mean, this is because that number becomes critical in any sort of planning, right? Because if you're
that's what I'm getting
25, if you're 25 and you say, when I quit at age 60, I want to have this big a pile of money. I'm willing to save this much. How much do I need to make on that to get there? Or conversely, as you said, when more people of this age listening than the other, they're saying, wait a minute, I'm 60. I'm going to retire in 5 years. I got this pot of money. How much do I need to make on that money to make sure I have enough?
And, here's one of the other dilemmas that I just thought of just now when you talked about how big a pile of money will I have. It also depends on how you measure the pile, whether that pile is neatly stacked in bands or it's just a loose pack pile like leaves. Because you need a much bigger pile if it's loosely packed like leaves.
Indeed you do. So, but let's talk about how much
you actually acted like that was a serious thought.
It sounded very serious the way you said it. Now you completely discombobulated
you stack
me.
your money up like a pile of leaves. Then it looks bigger.
I don't want to tell you where mine are in my backyard. But here's the thing. Yeah. Basically, everyone, all the professionals are telling you, you're going to make less on your money than you've made in the past. Is that encouraging?
Well,
I mean, here's the numbers. I mean, Wilshire Consulting, advisor to big pension funds, is now projecting its 10-year annual return for U.S. stocks, 5.5%. Bonds, 1.75%. The U.S. pensions as a group are projecting a return of about 7.2% for the next 10 years.
That sounds familiar. They always project 7%.
I know. But here's the they never make it. But this is always troublesome because if we run a plan for you, we either do it one of two ways. We put it in the computer and say, computer, how did this work over the last 60 or 70 years based on those returns? Or we ask it, what will the future look like? Put it in the crystal ball, because the future returns in the computer are lower than the ones in the past, by the way.
Are they? Well, that's
somehow.
Good thing.
There's some genius who's written the program who says you're going to make less, which is probably makes sense. But this is always the question: what can I expect to make on my money? And I think this is something we should talk about, because most people don't have an idea how that you always talk about risk return ratio, how to invest to make money without losing too much. Big questions.
Well, and it's funny you should say it's something we should talk about, because guess what we've been doing? We've been talking about it, and we're going to continue to, and talk about the things that are important to you at 855-935-TALK. So call.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And one of the reasons why your expectations for future returns should be lower than what they have been in the past are pretty obvious. We have very low inflation. Bond yields are down to almost nothing, and they were a part of the total return calculation in the past. And so, therefore, the expectation for stock returns, for equity returns, the amount of differential they have to provide to be worth owning over and above bonds is going to be lower. So, of course, the returns going forward, we just don't know what the exact number is, and nobody can know what that exact number is.
Well, and I will just take umbrage just a little bit with what you said. The stocks, the bond side, I have no question. It's going to be, remember, if you look at a high-quality bond portfolio going back to 1970, you've made somewhere around 5% a year. I would not expect that for the next 50 years. No way.
No.
Stocks, I always wonder, because new stuff comes along, it's kind of harder to put your finger on that.
A part of equity's return is dividends.
Yeah.
And those don't need to be as high to be competitive going forward.
And they're far less, by the way. They're going to be far less in 2020 than they were in 2019.
Oh, yeah, because lack of earnings to pay them.
Yep.
855-935-TALK. We want you to call us so that you get this right the first or maybe the second time. It's really sad when it takes the third or the fourth time for you to get it right. So call sooner rather than later, 855-935-TALK. And Tom has done just that. Another Tom. Tom, welcome to Talking Real Money, not you.
Hi, Tom. How are you?
Yeah. Good afternoon. I listen to your show occasionally, and I'm just a retired craftsman. And last week you mentioned something about someone who had invested over a period of time in foreign funds and then some bonds. And I didn't get and you said they made over $1 million in the time period. And I don't know if you remember that, but I was trying to get the time frame and what the bond funds were, or the stock funds, stock part.
Oh, I get to get out of this one because for most of the show I wasn't on, so I'm going to blame it all on Tom.
It was just the month of November. I think you put in $10. You ended up with $1 million, couple foreign funds, and some bonds. No, I'm kidding. No, that's not right. First of all, Tom, we recommend a portfolio that includes, on the stock side, half U.S., half international, or as you may call them, foreign. So there's that. Mm-hmm. Then on the bond side, we only use U.S. government bonds of relatively short, little tiny bit of corporate, but short and intermediate term duration. So they really go for safety there. I have no wait a minute, I'm going to go into this. Well, I have no recollection of promising $1 million. Is that good? No? It's been a while. So I don't know. That didn't work.
It was okay.
I don't recall saying you made $1 million.
Stand up is not going to be your thing.
I know.
You're going to be doing impressions.
Too old. I know. So I don't recall saying that, but I do. I will say this. I will say this about, as you call them, foreign funds, international funds, because next hour we'll talk a little more about this. I think they'll be the outshiner the next 10 years because they've been the underperformer this 10 years. That I may have said because U.S. has done far better than international for the last 10 years. Remember the 10 years prior to that, international did better than U.S. So there tend to be some cycles to all of this. The U.S. market has been bid up for a variety of reasons. And so we still would build a portfolio half in U.S., half in international.
And, Tom, let me just tell you one thing about this show, since you haven't listened all the time. The one thing you will never find on our show, you will never hear on our show, is any strategy to make $1 million in a short period of time. We just don't believe, unless you start with hundreds of thousands of dollars.
You start with two.
Or start with 2 million. You can get to $1 million.
Exactly. Quickly, very quickly. We got some pro shares funds. We got some shorting strategies on Tesla.
Yeah.
No, and I apologize if somehow you misconstrued that we could show a way to easily make $1 million on some foreign funds and bonds, because I don't know what that would be.
No.
Yeah, I just caught a little bit of it, and so it was my fault for not listening carefully.
No,
well, thank you for the comments. I appreciate that, and we'll listen more.
Thanks. I appreciate that.
Tom.
And I also
holidays.
appreciate any opportunity you can give me to make fun of Tom. So I thank you for that.
I got it coming. Well, and back to where we started the show.
You got to be the guy who sounded good last week on the show.
That's true. Yeah, I could actually hear me. Here about returns, because I do think this is a very important topic. I asked our friend, by the way, Paul Merriman, on a webinar the other night, what he thought the future would look like. And he said he went into some other explanation because he didn't know either. Nobody knows, right? Nope. I mean, the pensions don't know. Wilshire doesn't know. No one really knows. But the question to you, Don, is
go ahead.
How do they plan for the future if they don't know what they're likely to make on their money?
Well, no, you have to make guesses to plan. You do, and we make guesses to plan. We make guesses, but we make guesses based on the past. As you said, where we test various outcomes on based on past markets, and then you extrapolate a little bit based on the present, but you got to understand that that's just a guess. When it comes down to it,
the future could look completely different, right?
We just don't know. We can't know. And anybody who claims to know, I know what next year's going to hold for you, or I know what you're going to make over the next 10 years. These people, they have a really, really short name for them. They're called liars.
Liars, okay. I mean, by the way, here's the reason I trust looking back 50, 70, 90 years.
For trends.
There's nothing else for trends. Because there's nothing else to trust.
Right.
Everything else purely is speculation, right? I mean, and in some ways, saying the future will look like the past is speculative too, but less so.
And one of the more interesting things, though, about the long-term past, going back as many years as we can go, and really with a broad database of stocks and or bonds, we can really only go back right about 100 years, a little less than 100 years, because we don't have enough data prior to that. But we can go back 100 years, and that's why we say good times and bad, up markets and down, inflation, deflation, doesn't matter. The average return of equities, U.S. equities, over that period, because we don't even have enough data on internationals going back, but on U.S. equities, the average annual return, which is never the return you get in a given year, has been.
You made a great podcast about that, yeah.
It's been in the 9 to 10% range.
Yeah,
good and bad. So if you're going 90 years forward, then maybe the past 90 years is indicative. We don't know. Is it possible?
And by the way,
yeah,
but by the way, the other point to remember here is that basically no one ever makes that. Right? Because you have to start and stop at the right dates because people have a tendency to move money around.
Oh,
we've seen this year all the time. Hey, I got to get out. I'll wait to get in. I'll do the market, the election, or the COVID, or the whatever.
Right.
They have a tendency to.
Hey, Don. I got a lot of money and I want to invest it, but I think I need to put it in slowly because the stock market. Well, you know how it is right now. It's volatile. It's always volatile. 855-935-TALK is our phone number. 855-935-8255. 24 hours a day, 7 days a week, that number works. But it also works really well on Saturdays when we do the show live, so we can have a live conversation.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Did I mention that in addition to calling us with your questions at 855-935-TALK, we also accept questions in written form, which gives me the opportunity to read the questions and try to stump Tom. So send them in at talkingrealmoney.com on the contact form, or give us a call at 855-935-TALK. Okay? Now, we answer those questions either on the show or on the podcast, so that requires, by the way, you may not get an answer on the show if you're a show listener, so to get your answer, this is kind of sneaky on our part, you have to listen to the podcasts.
Oh, one of those things. Must be present to win kind of deal.
Must be present to get your question answered.
Oh, all right. You make things so complicated. It's piling up the leaves for your money and all the rest of it.
I am trying to build our podcast
Just give me my
audience.
7%. Would you please just give me my 7%?
All right, but do you want it in a taxable or a tax deferred account?
I don't want it wrapped up like leaves in my backyard. That's what I do know.
Well, I'm just saying. Okay, let me go with that for a minute. You've got your bills all neatly stacked in tightly packed bundles of money. If
Yes.
you break those apart, they are only about this tall, right? That's about that tall. But if you break those bundles apart and you kind of stack them loosely and crinkle them, your pile of money looks bigger. So it's just a psychological thing.
Yeah, okay, I guess so. By the way, there was a guy once who told us he had $200,000 buried in his backyard in a metal thing.
The Pacific
I had his
Northwest?
address. Yep, I had his address.
Those tend not to go well.
I know.
Money rots underground.
I tried to rent a metal detector the next weekend, but I couldn't find one.
All right, I have a question for you. It came in online.
Hit me.
Oh.
No.
I didn't. No. Right. We're 3,000 miles apart. I can't hit you. Okay. The subject, here you go. Ready? It's taxable account. Would you explain how taxable accounts work? Also, what kind of investments are best for that kind of account? That's it.
Tax efficient ones.
Okay, but what's the purpose of a taxable account?
Remember, your investments should be viewed through the prism, if you will, of taxation, right? Pre-tax money, like your regular 401k and IRA, goes in, it grows. There's no taxation while it's growing and dividends are being paid and interest being paid, et cetera, et cetera. And then when you start to take it out, you got to pay regular income tax on it. That makes sense, right?
Yeah, I get that.
Okay. Then there's this whole thing called Roth. Mm-hmm. That goes in after you've already paid tax on it, whether it's a 401k or IRA. By the way, I think for a young person, Roth makes a ton of sense because you're going to get all those decades of growth. Everything happens inside there, no taxation, and you take it out, and there's no taxation. Then there's the entire rest of the world, everything else that's invested, everything else that's in a savings account or buried in your backyard or whatever it is. That is money that's just exposed to whatever taxation the government would like to put on it. So, for example, when you get dividends there or interest, or you buy Tesla at a certain price and then you sell it later at a higher price or lower price, all of that activity gets taxed in various ways, right? There's different ways for stock sales to get taxed and capital gains and interest and all of those things. So the short answer to your question is yes. For example, he
asked what kind of investments work best.
Well, okay, all right. Well,
you answered yes.
I already said.
It wasn't a yes/no question.
You didn't like my Reagan imitation, so I'm not going to be as nice to you. So here's the thing.
I was very good, Tommy.
Here's the thing.
Yes.
You should own probably things like stock funds, exchange-traded funds. Remember, exchange-traded funds are more tax efficient.
True. They don't distribute gains.
Taxable, remember, an exposed account, a regular brokerage account. Holding things like bonds are not as good in a taxable account because you're going to pay
Income tax
on income tax on the income,
right.
et cetera, et cetera.
Okay, I got that.
Those are some things. You don't want to be trading things. Of course, we don't think you should be trading them anyway, but in a taxable account, it's even worse because people forget about, like at Robinhood, my goodness, what are the taxes? The government's going to be very happy to see the end of the year there because they're like, wow, look at all these 1099s you got to pay all the taxes on. I traded this stock, I made this much, et cetera, et cetera. So, yeah, this is a very important part of investing, something that people overlook.
Well, that was a good answer. That was excellent
Yes.
answer. And by the way, the other question is, the money in the backyard, if it rots and it's not usable, is it a taxable loss? Can you write that off?
That's a great question.
I just want to make sure. 855-935-TALK. Call.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
And we had a lovely gourmet lesson during the bottom of the hour break there while you were listening to other things. Yes, a yucca.
Lesson.
It's like a cactus.
Yes.
It's like yucca.
I'm not eating cactus, and I'm not eating fried banana either. So sorry.
Plantanos.
But the tacos look ridiculous.
All right, well, that's... You know that one,
those.
Mr. Rube.
I know. I know, exactly.
He goes,
exactly.
All right, I know a taco.
Exactly.
855-935-TACO. No, I'm sorry.
Oh,
855-935-TALK is our number. Oh, you just made me hungry. Now I'm thinking 855-935-TACO. 855-935, though, 8255. Give us a call. We'll talk about money or food with you. Either one is good. And Nancy, you're next. Welcome to the show.
Hi. I have been laddering CDs, and I'm 5 years out. And I have one that's due this month for about $17,000, and there's just no good interest rates out there, and I'm wondering what to do with that money.
Oh, Nancy. The whole point of a ladder is to build discipline. The whole point is the reason you have a 5-year ladder is because if rates go up, you'll be investing the money that's coming due at new higher rates. And if rates go down, as they have, you've got a bunch of CDs earning a higher yield. If you break the ladder, you break the discipline.
Even though they're not paying very much money, if it's really just about safety and trying to make a little bit of money on them, or a little bit of money on your money, we're not going to run off and tell you to buy Tesla or Airbnb.
Well, you had once mentioned on the program a good bond fund with Vanguard.
But that changes the whole strategy, though. What I'm saying is this changes the whole strategy. If that's the case, then going forward, you should just go with the bond fund and accept the fact. You see, the nice thing about your CD ladder is you will not lose principal, period, no matter what. In a bond fund, you will at times lose principal.
Not very much, and let me give you the bond fund
you will.
just so you have it. There will be variations. There will be some volatility, but let me give you the fund because it's an alternative. I agree with Don. They're two separate strategies. I like the bond fund better because, by the way, there's advantage to the bond fund. You get your money tomorrow. Can't do that in the CD with no penalty, right? And the yield today is going to be greater on this than there would be on a CD. You need to accept the fact that there will be some variations in price. But the bond fund that we recommend is VFSTX. V is in Victor, F is in Foxtrot, then S as in Sierra, T as in Tango, X as in X-ray. VFSTX. It's the Vanguard short-term investment grade bond fund, still yielding probably right around 2, I'm guessing.
Yep.
And again, I agree with Don. There are periods of time when the value of the fund goes down a bit, not a lot, nothing like stocks or high yield bonds. So you have to be prepared for that. But in today's environment, I have a lot of struggle getting people locked in, Don, to anything longer than a 1-year CD. I know people want a ladder,
but you see, the ladder means you have a portion of your money coming due in a year. It means you've got a year.
So it'd come up.
Right now, you can go out, if you go to Bankrate.com, I found a credit union that you can go onto online and get 1.2%.
Which is pretty doggone a high yield savings or something?
It's a CD, a 5-year CD.
CD, okay.
It's a 5-year CD at one, but that's the ladder.
Yeah.
That's
right.
But bear in mind that there have been, as a matter of fact, earlier this year, the short-term bond fund took a big dip. It was quite substantial. And those kinds of things scare people. That's my worry.
Right. That's the thing. Yep. That's what you got to be paying attention to. I hope that helps, Nancy.
Yes. Okay. So
there isn't one answer. It's our bottom line here.
It was VFC and then T like in
no,
Tom
VFS. VFS. S as in Sierra, T as in Tango, X as in X-ray. VFSTX.
All right. Thank you so much.
You're very welcome.
You're
Thanks
most
for calling.
Welcome. This is very important thing for every investor to remember. There's always a trade-off between return and risk.
Yep.
There's no escape.
Yep.
If there was, by the way, if there was an easy way to make 5% with no risk, well, here's my money. I'm not going to put it in stocks anymore, right? Or bonds. Why would I? It doesn't exist, I'm sorry to say.
Yeah. And you know, with this Vanguard short-term corporate, in 2018, the value of your portfolio was down for the entire year. The whole year. The only thing that saved you from a negative overall return was the income stream.
Correct.
And then you only got 1% for that year. That's why you have to balance this out.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Now, this is for the listeners to the radio show, the live radio show. If you're not listening to the live radio show, you won't get this reference.
It should be.
But have you ever noticed that the traffic people no longer even pretend to be in a helicopter?
Oh, no, that's all gone now. Yeah.
Yeah, they don't pretend to be.
Hidden away in their basement.
Flying high over the city.
Oh, by the way, you'll be glad to know that the Wall Street Journal yesterday did the home of the future, and one room that people are adding is the soundproof booth that they never had before because they need to have more Zoom meetings and calls from home than they used to.
Oh.
And you love that. You already got that.
Well,
in your
it's
house.
not soundproof. I want this booth to be soundproof.
I know.
And in my new old house, it's going to be soundproof because you know what can come through any soundproof room? Well, that's why I got to do a super soundproof.
Dog, children.
No.
Yeah.
Leaf blowers.
Oh, please. You're now going to ruin my weekend. You know how much I absolutely abhor those things.
Gasoline leaf blowers. They go right through your soul. They penetrate your soul.
They go through mine.
Yeah.
They come every week to our office, and I go, a leaf literally has not fallen in 3 months, and they're out there doing it.
Well, in Florida, we get it all year. And in my neighborhood, everybody has their own company that comes in. And so you've got it on Monday here, on Tuesday here, Wednesday afternoon over there, Friday morning over there. It's just, and then the neighbors who do their own yard, they do it on the weekends.
Good news. The first thing I will do when elected president is outlaw leaf blowers. In there, done.
It's in your platform.
It is. Get your back into it, as my son used to say, with your rake. Let's get going. So.
855-935-TALK. Well, the good news is for all you leaf-blowing people, Tom will never be president. 855-935-8255. Jim, you're next. Welcome to Talking Real Money.
Hi, Jim.
Hi, Don. I wonder if you can help me out with a couple of suggestions. I received a $250,000 lump sum retirement payout, and I'm wondering what to do with it. I was thinking a short-term bond, keep it kind of safe, but have a little bit of growth in dividends.
Tom, ask the very important question. You ready? Do you want me to ask it for you? Since you're taking a gulp of water. What is the purpose of the money? What is this money going to be used for in the future?
Well, for retirement, but not till age 72. I'm 68, and I have other funds available, investments. I have an Air Force pension coming in, so I'm not hurting for it. for it. So I want to have some safety with a little bit of growth.
Okay, well, one, in a short-term bond fund, you're going to get a degree of safety, but forget about the growth. It's not going to happen. Bonds don't grow.
I guess the question would be, why do you want to be so conservative when you already have the pension? I'm assuming Social Security as well?
No, not till age 70. Okay, so...
But he'll have age 70, yeah. So you'll have a pension
both
and
income.
Social Security. Yeah, got it.
Right. I have about $700,000 split between Roth and regular IRA in different.
And how is that invested? How is that invested, Jim?
In large growth and small stocks, small growth mutual funds.
All in equities. The
all in
700's
equities.
all in equities.
Yeah. That
right?
is correct.
Okay, well, now it's starting to make sense that the 250 would be safer money. That's clearer. Have you determined what your risk tolerance is, your personal risk tolerance?
I have a pretty good level of risk.
Okay.
So fairly high, moderate to high.
Have you taken our risk quiz?
Yes, I have.
Oh, good. Remember
what was your score?
Risk is up there.
He's okay. He's up there. All right.
Did you do the one with the electrodes or not?
Probably when I was born.
You're not. You can't take that much risk.
I love saying that to people because they go, "I'm never taking that." I think Tom's sitting at home turning it up. Oh.
Well, I see this as a golden opportunity, actually, Jim. I see this as a really wonderful opportunity to create a plan for the whole portfolio. To really, because you said you got some large and some small, it sounds a little hodgepodgery. And what you probably should do, this money is going to be, this was post-tax, this is taxable money going forward?
It's a rollover. It's actually, I didn't opt for the monthly pension because I'm okay, so I took that lump sum.
So to go into an individual.
It's going to go into an IRA.
Into an IRA. Yeah.
Oh, yes.
What to me, this is a wonderful opportunity to kind of get all your assets combined in one nice, handy place where you really develop the plan that X amount is going into U.S. stocks, X amount is going into international stocks. A portion of it is going to go into bonds based on my risk tolerance. Then I'm going to rebalance that every year.
And let me ask you another question. Between your pension and Social Security, when you receive it at age 70, will that cover most of your costs?
Oh, yes.
Will those two?
Yeah, absolutely.
Okay, so here's another way to look at it. And here's how I look at that, then the rest of the money. Okay, because I don't know if you have charities you're interested or family you want to leave the money to, because if you're not unlikely to spend it, putting it in bonds is costing the people you want to leave the money to money, right? Because bonds have made less than stocks. So I agree with Don. First, a plan in place to say, here's what I'm trying to make on the money. Then when I look at the whole thing, my IRA, my Roth, et cetera, here's how it's invested with that in mind, rather than just saying, I just took in $250, give me a short-term bond fund.
Because most investors don't have a plan for the money. They just kind of do whatever seems expedient at the time they're doing it. And that, and this is it's such a great opportunity because you've got $1 million. And now you can properly allocate all those pieces and parts for your various goals in your golden years, as they call them. I don't know why they're golden, except that our skin turns kind of ruddy and maybe yellow when we get jaundice.
Mine doesn't look very goldy,
yeah. Your hair doesn't look gold. It's
Is that
silvery.
helpful? Yeah, thanks a lot.
I think that's helpful. I think I was thinking of the 250 and maybe some type of retirement dividend paying fund, but I have to search for that.
I'm telling you, I wouldn't even go that way. The way I would do it, this is how I would build it. I would take look at your overall risk tolerance. Determine what portion of the portfolio is going to go into bonds. That portion would go into short, intermediate, preferably government bonds because they're safe. That's what you want for your security. Then the rest of the portfolio will get split evenly between U.S. stocks and international stocks. Doesn't matter what the dividends are. Ignore dividends. You'll get dividends. Then within that, if you really want to start getting into the weeds and start eking out tiny little additional fractions of a point of return, then you start adding in, you overweight value a little bit. You overweight small cap. You get into some emerging markets. You get in a little in real estate trusts. You start to build from there. But the first basic step is what percentage in high quality, safe bonds, what percentage divided between U.S. and international stocks. That's where you can stop.
Good starting point.
Yeah, you can stop
good starting
there.
Point.
Okay,
I think that's really helpful, especially the portion for the bonds, which I'm lacking, the safe bonds. So that's really good advice. And
bear in mind, if you look at it all as a single portfolio, you treat it like one entity. You don't look at the individual parts and go, well, that one's beating that one's doing better. You look at the whole thing and you go, oh, I'm only down. When the market's down 20%, you go, I'm only down 5% because I've got the bonds in there, stabilizing my portfolio.
Thank you for your call, Jim. By the way, anyone can go to TalkingRealMoney.com and see 3 different fund families where we offer free portfolios to do exactly what you just said, Don, at Fidelity, Schwab, or Vanguard. It's absolutely
super
free.
simple. And you just
very inexpensive indexes.
Go to TalkingRealMoney.com, click on the silver-haired woman with the earbuds in her ears, that little picture there, and that'll take you right to it. 855-935-TALK. Call us, and we'll talk about life and money on the show.
Tom and Don are talking real money.
Want a free copy of my book, Financial Physics? Well, go download it right now at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And, of course, when Tom and I started our investment advisory firm, Vestory, over 10 years ago, about 11 years ago. Oh, it's been 11 now. We of course, wanted people to become our clients and let us help them manage their money. But we did something that I think is really, really unique in the industry. I mean, everybody offers these free consultations, but you know what you're going to get. You're going to get a sales pitch, right? We decided from the get-go that's not the way we were going to work. We will help anybody get started on that plan we were talking about. Whether you become a client or not, it's free. There's no obligation and no sales pitch. Just go to Vestory.com and set up an appointment.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?